Well, that's true. And like Diana mentioned, falling mortgage rates certainly has provided a little bit of a tailwind. And we did see that buyer activity was improving in April and May. And I think that's what drew some buyers into the stock, which led to valuations, and not just Lennar, but across the group. We saw elevated valuations going into the end of May and early June, and just got to a point where we started to realize, look at these gross margin expectations. And we started to realize that consensus earnings expectations weren't factoring in that the level of incentives and promotional activity that was needed to boost that demand was much more elevated and extended much longer into the springtime than this time last year. And that's a function, not only obviously tariffs are a cost input, but those incentives are a function of higher competitive resale inventory. And in the core home building markets where we were tracking the data and monitoring this activity, we're just wrestling with a lot more resale inventory on the ground for the builders to compete with.
Right. So to be clear, what you're saying is in markets like Las Vegas, the supply of existing homes is up 85%. It's up 50% in Seattle, 21% in Dallas. And these are typically lower priced, so the new homes can't compete. Why is the inventory up so much in these markets?
That's a great question. It's starting to see a little bit of mobility coming back, and maybe just an elevated level of demographic shifting going on right now. A lot of inputs into that. It's not necessarily an easy one to precisely pinpoint, but you can see when it's happening, and that's what we were trying to identify, is that on a year-over-year basis, the builders did not have the same level of pricing power. We got some tailwind from the mortgage rate decline, but it was an awfully sluggish start to this year's spring selling season. So we were just clawing back to break even, which is effectively what Lennar reported, with 1% order growth on a year-over-year basis.
You also see some declines in consumer confidence in the numbers that came out today, and I wonder whether that is manifesting itself both in home purchase intentions and actions, and also in auto sales, among other places. We've been zeroing in here on the fact that tariffs, says the company, are impacting them to the tune of about $500 per home. Is that material or not?
Well, it's a factor. It's one of several. I think land costs are another factor, and land costs being prohibitive because the cost of entitlement continued to extend, and that's largely a function of local regulations and government taxation measures. Couple that with just the promotion. The promotions for Lennar, for example, were up $2,300 per house, whereas the identified tariff impact was $500 per house. So it's all adding up, and it's all leading to cost pressures. And as Diana mentioned earlier, the level of pricing power in the market this year just isn't what it once was.